What's up, everybody? What's going on? Welcome aboard to Trading with Bubba. It is Thursday. It is the 25th of January, and there's nothing to do. It's the same crap every day now. There's no market action. All we have is buyers in the market right now. There are no sellers. We're getting very little two-way trade. You get the occasional bump to the downside, but basically, they just want to go higher. And again, when you look at the overall picture, you're overbought in many markets. You're oversold in some. But the overall activity, the trading activity is very light, which is why, unfortunately, I got to tell you the same story, which is you're going to sit to continue to sell premium. I don't think there's much else to really do here. I think you want to look for conditions. For example, yesterday morning when we did our update, we talked about selling, and of course the market broke down a little bit late and paid us off on all those spreads. And I think you look at the S&P futures, they're overbought. So the probability is they either stand still here or come off a little bit. It doesn't mean, when you're selling premium, it doesn't mean that they have to collapse. They just don't. They don't want to go any higher. So if you use the spiders, for example, to sell options, okay, the zero DTEs, you can sell. If you can sell the 490, 491, 492, you just don't want it to go past 490. You make money anywhere below 490. So if you're overbought, which you are, then you're just playing the probability. Again, the whole trading model is a probability model to begin with. Okay, so if you look across the board, Apple was very oversold. Now it's overbought. You would like to be a seller of Apple Premium somewhere around here, maybe the 197.50s, 200s. Again, now that you have to be careful because there's earnings next week, but you can do it for tomorrow and today. Because it's Thursday and tomorrow's expiration for all these weekly options, you've got the zero DTEs for today and you've got one-day trades for tomorrow. So you can take any one of these and one thing I do want to warn you about is don't do too many, okay? Don't put yourself in a position where you're going to be scrambling or get hurt, okay? The objective of selling this kind of premium is to try to pick up, depending on the size of your account, $100, $200, $300, whatever the size is that fits percentage-wise to you. It could be $50, whatever the number is. It has to commensurate with the size of your account. But Apple at overbought should be sold. Amazon overbought should be sold. Okay, coin oversold probably should be bought. Okay, in other words, sell put spreads. So you're always rotating to the side of the market and knowing that as long as the markets don't move past your strikes in that direction, you make money, okay? And you're actually protected to the credit of where you sold. So in coin, for example, if you sold to 119, 118, for example, you're protected to 118 and change whatever credit that you collect. So again, you're not taking an enormous amount of risk, okay? All you're playing is that the markets are going to continue to be slow and there's not going to be much going on. And that's what we're watching here. Meta continues to break to the upside. Very overbought. So what do I want to do? Well, the probabilities are that, it like I said, at worst, it'll flatten out and go sideways for a while. If you remember that the markets go in three basic phases, and if you just hear, you've got consolidation, you've got a breakout to a trend, okay? At some point, it's going to just slow, as you've seen at different levels across. Here it was overbought, went sideways, came back down. Here it was overbought, went sideways, came back down. Well, we're in the same position. So if you understand that the markets continue to repeat themselves over and over again, you're setting yourself up for a potential profit trade with very low risk, okay? Google, very overbought. It should be sold, okay? And again, here, what I'd be looking for Google is right now, it's spiking higher. What I would do here myself is I'd go to a shorter term charter and look for a selling. And there it is. See, for me right now, I'd be selling spreads right now in Google, okay? Because again, it's showing me that it's probably peaked out for the morning, all right? IWM, here we are, just rotating around the mean. There's nothing to trade here. All you are is rotating in a very tight area. What are you going to do here, okay? There's much better trades to play instead of trying to hover around when the markets have no movement. Microsoft continues to explode to the upside. Again, this is well overbought once again. My guess is you're going to find some splat spot. Here you found it here. I'm sure you'll find someone right around here as well. And that's all we're looking for. Again, we're not trying to forecast what's going to happen tomorrow or the next day or next week or next month. We're looking at a very short time horizon that allows us to use the markets to collect a little bit of premium while we're waiting. Okay. NVIDIA, this is one that continues to hammer me away. I've been a little bit more aggressive here myself and have lost. So far, I'm 0 for the last 3 in NVIDIA, but I've been trying to short it through selling deep in the money spreads. We haven't got to that point yet, but this is extremely overbought, but it continues to go higher. And remember, there is no time horizon on how long they can be overbought for. Okay. So you're only playing a statistical model, which means that you have to have a defined amount of risk so you know exactly where you are. The Qs, very overbought. In fact, I'm gonna sell today. I'm gonna sell 0 TTs in myself. Okay, I may even do it before we leave here, but I have to go to a different platform. Square, the opposite. Okay, I'd be selling put spreads here because here we are coming down to the bottom, getting to the oversold condition. All right, and of course we know, if you don't know, Square, which is obviously called Block now, has a lot of relationship to Bitcoin. Okay, so you see coin down, you see all the crypto stocks down. Square is most likely going to be down with it as well. The spiders we looked at, but again, we would look to be sellers. Tesla getting hammered today. Okay, now this is a completely different type of trade that you can look at. Okay, this we would call a potential blow-off trade, and a blow-off is when price and time become meaningless. Nobody cares about price and time. They just want out. And that is exactly what you have here. So you went right from sideways to crush on earnings. Okay. There's really no real support here. All you're playing here now is that the sellers have exhausted themselves and there should be a bounce. Now, this is a trade that when I look at it later, and I'm not looking at it yet, I want to see if the volume continues. But when I look at this, if it is still going down, I will wait until it starts to turn higher, and then I would go back again to my short-term frame. And you can go to whatever is your short-term frame, but we haven't seen any evidence that it wants to turn around yet. But once it does, so right now, if I was looking to get in, if it got back above 186 or 187, I'd look to get long this. And the way that I would get long this stock now is to sell a deep in the money put spread. Okay. Selling a deep in the money put spread is creating a synthetic call without the benefit of the unlimited profit potential, but you're buying that same call that if you went and bought it on the board, okay, you're going to pay half price for it. Okay. Win continues to pop, but right at consolidation. Notice it came from oversold and came right back to the mean. Okay. XBI just chirking around, came off the bottom, right? Tuesday we said we would sell put spreads here. Look at the little bounce. Okay. And again, we're not always going to be right, but again, we're managing our risk so that we keep ourselves in the game and give ourselves the best opportunity to be successful without. Okay. In fact, I can't show you the platform because it's on a different screen, but I'm going to look at a couple of things right now that I'm going to probably sell some spreads here. Hold on, right now I'm going to tell you what I'm going to tell you exactly what I'm going to do. Okay. I'm going to be a little aggressive here, but I'm going to sell the 428, 429 call spread. Okay, that expires today in the Qs, and I'm selling it for 43 cents. Okay, so I just got filled at 43 cents. Okay, I'm risking $57 to make $43. Okay, but I've only got a little bit of leeway, but I'm going to guess that this market's not going to charge higher. I'm going to guess that it's going to sit, okay, and kind of hover like it has been doing the last few days. Okay, so and I'm going to do the same thing with the SPY. Let me go find the SPY here real quick. And the SPY are at 480, so 488. And this may not be enough premium. I want to make sure I get paid enough as well. And I'm going to do the SPY. Okay, this is something I don't normally do, but with only a couple hours of expiration, I'm going to sell the SPY. Okay, 488, 489 for 30 cents. Okay, so here I'm risking $70 to make $30. Okay. For about a 10 o'clock, about a 4-hour trade, about a 4 to 5 hour trade. Okay. And again, all I'm playing is the statistics that the market should hold in here. Hold on, I'm on the wrong time frame here for you guys. Hold on 1 second. Yeah, that's better. Now you can see the overbought conditions that we were talking about. Okay. And that's what I'm looking at, and that's what I'm looking to end. So I put those 2 trades on while we were here together. Okay. And we'll see. Look, they don't have to work, but I'm not worried because I can put on enough volume of these trades that I'm playing the same probability model when I do this. And if we take a look at the shorter term chart to see what's going on in the futures market, okay, well, you can see we're kind of going sideways here as well. Okay. There isn't much excitement here to really deal with. So at the end of the day, okay, I can look to play that model and not put myself in a major group of jeopardy, because we have the S&P going pretty much sideways, consolidating. You've got the NASDAQ pretty much consolidating, and the NASDAQ for the last hour or so has had a little bit of lean to the downside. Okay, you've got the Dow that's kind of found maybe a little bit of a bottom, but there should be some resistance, so starting consolidation. And the Russell continues to fall a little bit after being up really big early this morning, now coming back a little bit. So this is what the model is about. Is again, you're playing now. Each condition of the market will give you different things that you can do. In the current market conditions that we have, okay, there's no reason for us to be overly aggressive. Okay, in the current conditions, if you're overly aggressive, you're probably overpaying. You're probably not in a high probability situation, and you're probably putting yourself in jeopardy to make money versus not. And I think this is something that you have to recognize. Now, I think one of the key things to look at for today as well, okay, is the VIX, which is not the fear index they like to make it out to be on TV, okay, but it is the volatility index. With the volatility higher into a market that is higher, that indicates that this market is probably going to have a little bit of a pullback later. Okay. It's not something that you should be worried about or playing for, but typically a higher volatility index into a higher market means that the market is getting pretty much overbought into a position that it should have. Again, it doesn't have to be a major reversal, but it's getting to a position where it'll probably stop going higher. Okay. And again, it doesn't mean it's going to go lower. It just means that all we're playing for is that it's going to find a level in which it's not going to go much higher. Okay. And that's what you watch the VIX, because when the VIX and the indexes are going the same way, VIX going down, index is going down, normally that's telling you that you're very near a short-term bottom. VIX going higher, markets going higher, usually indicates markets are done going up. Okay. And again, nothing is 100%. I don't want you ever to say that, oh, well, he said this. Nothing is 100%. Again, the best we can do is create the highest bit of probability here. So if we trade the correct amount of size, okay, based on our account size, and we make the right trades based on the market conditions, then we're increasing the probability of making money, because we're going to be on the right side of the market more often than not. Okay. And again, in the trades we're doing today, and the 2 trades that I just put on, I just need the market not to go much higher. I have some room for it to go a little bit higher, but not much. But again, I don't care if it breaks. All I care is that at worst it goes sideways, and then I'm going to make money. Okay. That's what it comes down to. Okay. Again, I'm not getting too aggressive here. In fact, after I'm done with this, I'm going to play poker. I'm not even going to watch these trades until I look at them at the end of the day, see if I have to do anything. Because to me, this market is virtually untradeable from a trader standpoint, not from an investing or a swing trade, but from a short-term trader standpoint. This market is virtually untradeable. There's not enough volume. There's not enough action. And again, one of the biggest things we like to see is what we call two-way action. The sellers push them down, the buyers push them back up, and you get into a bigger battle. We have not seen that. Basically, the market has been dominated on lighter volume by the buyers. Okay. And again, there's nothing wrong with that, except that when you get a market like that, it takes away the volume, it takes away the trade, and you have to be the adjuster. Okay. The market is not going to adjust to you. You have to adjust to what the market is giving you. You can only take what it's willing to give. Remember, the market itself is an inanimate object that is controlled by the order flow and the paper flow that comes through from market makers, traders, firms, and everything else. Okay. And as you can see, when volume is drying up, what is the message that it's sending you? The first thing it's telling you is that there's probably not a lot of commercial participation right now. So without the commercial participation right now, the markets will probably drift higher, because dull markets drift to the upside and they find levels and then they stop and they sit. But when's the last time we really saw a major hard sell? It's been quite a while. And I'm not talking about 300 or 400 points in the Dow. That's less than 1%. Okay. We all get confused when the numbers are big, right? 400 points. What is 400 points? Well, 400 points is virtually nothing. Okay. It's almost a break even. It's like a scratch day. It's just around 1%. 1% moves. If you had $100 stock that moved 1%, would you panic? Probably not. Okay. So again, don't get caught up with the size of the numbers. Okay. It means nothing. Again, you want to get shocked? Go look at what your minimum wage was when you went to work for the first time and check what the minimum wage is now. Okay. When I went to work for the first time, it was $1.60. Okay. So again, everything is based on percentage. When I started trading on the floor, the Dow was 800. So don't let the big numbers get you. Okay. The percentages are what you're watching. The numbers are what you're watching. The markets are what you're watching. And again, you can only put yourself in the best position and the highest probability. Doesn't guarantee win, but it guarantees a higher percentage of win. And manage correctly with money management, it allows you to make money. And again, remember, if you make a little bit every day until it gets busy, all you're really doing is giving yourself the ability to increase your trading size when trading gets all that much better, because you have to organically grow your account by the continuation of making money like every day. I mean, you're not going to make money every day, but you're trying to make money every day. So if you're if you're making $50 a day, okay, on a $5,000 account, okay, that's 1% a day. Well, if you do it for 10 days, you've made 10%. You now have a $5,500 account. Okay. Again, remember, don't get caught up. Don't get caught up with the news and all the bullshit that they talk about, because that news is already old. Okay. The information that came out this morning that we tried to trade and hope to give some action was already out. Everybody knew that. That's why there was no reaction to the market. The only news that will really drive this market in a dramatic fashion is what they call a fundamental news bomb, which nobody can account for. It's not an announced number that's coming out at X amount of time. It is something like suddenly the banks come out and say they're collapsing, which is probably going to happen at some point. There's another terrorist attack. Things that cannot be predicted today that just show up in the tape. Those are the types of news items that create gigantic movement. Normal everyday news, they don't change the trend of this market. Everybody knows what the news is going to be and what the numbers are going to be. So be careful. Don't put yourself in jeopardy. Get the edge. Know that some trades are going to be losers, but add on and try to add on to your account little bits at a time every single day, and you'll be much happier and you'll enjoy this business much better. And for me, I'm going to play poker. So have a great day, everybody. I'll see you back here tomorrow for the update and Tuesday with the next show. Take care, everybody. We'll see you later.